Hello everyone, I'm Dr. Indrayani Katti. So let us learn in today's session the cash flow statement. Let us go to the theoretical aspect of cash flow statement. Cash is very important in these days. So how the cash flow statement is prepared and why it is prepared, let us look at. Why cash flow statement? Financial statements are defined in Companies Act 2013. According to Section 240, subsection 40, financial statement also includes cash flow statement prepared in accordance with the Accounting Standard 3. Hence, it may be noted that the fund flow statement is no more considered relevant in accounting. So, how and why the cash flow statement is mandatory in these days? As per Accounting Standard 3, issued by the Chartered Accountants of India, Institute of Chartered Accountants of India in June 1981, which dealt with a statement showing changes in financial position that was called as fund flow statement. Now it is replaced and revised, and now it deals with the preparation of cash flow statement. The revised AS3 has made it mandatory to all the listed companies to prepare and present a cash flow statement along with the other two financial statements. So let us look at cash inflows and cash outflows. The meaning of this itself is covered in the cash flow statement. So cash flow statement is a statement which deals with the inflows and outflows of cash and cash equivalents of an enterprise over a period of time from various activities. The third important financial statement is known as cash flow statement. So let us look at the meaning of cash and cash equivalents. As per AS3, cash comprises cash in hand and demand deposits with the banks. And cash equivalents means short-term, highly liquid investments that are readily convertible into cash and which are subject to an insignificant risk of changes in value. Example for this is short-term marketable securities. So next, let us go to the next slide. It is focusing on what are the objectives of cash flow statement. The primary objective of preparing the cash flow statement is to provide useful information about cash flows, that is inflows and outflows of an enterprise during a particular period under various heads, because business organization includes different activities. So those activities are categorized into three, that is operating activities, investing activities, and financing activities. Second important objective of the statement is to assess the ability to generate cash and cash equivalents. And third one is to assess the needs of an enterprise to utilize these cash flows. Fourth is to evaluate the ability of an organization. And fifth one is to take economic decisions by the users of accounting information. Let us look at how useful the cash flow statement is and why it is useful. The utility of cash flow statement. First, it deals with and it focuses on short-term planning. It helps a lot to prepare the short-term planning for an organization. And it also helps in cash management, and it shows the liquidity position of the organization, and it also focuses on the success or failure of cash planning, comparing the projected cash flow statement with the actual statement. Let us look at the loopholes. What are the limitations of cash flow statement? The first one is it takes into consideration only the cash and cash equivalents. It means it ignores the non-cash items. Second one is the manipulation of cash flow statement is possible if the management does or postpones the investment in the fixed assets may be there. So outflow of cash can be postponed by the management, manipulated by the management. Let us look at the fund flow statement and cash flow statement. What kind of differences are there in the preparation of fund flow statement as well as cash flow statement? So you have already learned in the earlier session the fund flow statement meaning, the preparation, etc. So this side is connected with the cash flow statement. The other side is fund flow statement. First, let us deal with cash flow statement. It is prepared on the basis of cash and cash equivalents, whereas fund flow statement is prepared on the basis of working capital. Second one is cash flow statement prepares the cash from operating activities. Cash from operations is calculated here, whereas in the fund flow statement, funds from operations is calculated. In the third one, the statement of working capital. The statement of changes in the working capital is not prepared in the cash flow statement, whereas it is prepared in the fund flow statement. The fourth one is it is stated with the cash flows from operating activities. It is started with the same, whereas it is started with funds from operations or funds lost in operations. And the fifth difference is it is ended with the closing cash balance or cash equivalents, whereas the fund flow statement ends either with the increase in working capital or decrease in working capital. Let us look at the sixth difference. The reason for change in cash are known through the cash flow statement, whereas the reason for change in the working capital are known through the fund flow statement. Seventh one is short-term financial planning is done through cash flow statement, whereas medium-term and long-term financial planning is done through the preparation of fund flow statement. The cash flow statement, the cash flow analysis is based on the cash concept, whereas the fund flow analysis is based on the accrual basis, accrual concept. It is used for preparing the cash budgeting, whereas fund flow statement preparation is used for preparing the cash capital budgeting. And the last difference between these two is it shows only changes in cash position, whereas it is concerned with the changes in working capital between two balance sheets. So let us come to the various types of different activities of an organization. So all the activities of an organization are categorized into three parts, three activities. First activity is operating activity. Second activity is investment activities. Third one is financing activities. So let us look at the preparation of cash flow statement. So there are two methods. One is direct, another one is indirect method. So the formats, what kind of format do we follow while preparing the cash flow statement? So the indirect method reconciles from net income to cash provided by operating activities. It starts with the net profit or net income, whereas direct method reports all cash receipts and cash payments from operating activities. The difference is here in the direct method and indirect method, the preparation of cash flow from operating activities, only this part is different. The rest part, cash from investing activities, cash from financing activities are same in direct method as well as indirect method. So let us look at the cash flows from operating activities under direct method. So cash receipts. When does a company receives cash? Cash receipts from sale of goods and the rendering of services. Cash receipts from royalties, fees, commission and other revenues. Cash receipts from insurance enterprises for policy benefits or claims. So what are the cash payments under the direct method from operating activities? So let us focus that. To suppliers, cash payments are made to suppliers for goods and services. Payments are made to employees. Payment is made to insurance companies for premiums, claims, annuities, etc. And for income tax, unless they can be specifically identified with the financing and investing activities. The income tax which is paid for the operating activities is taken in this payment itself. Coming to the second type of second method, that is indirect method. So here we take into consideration the net profit or net income before tax. So what is added in this is add non-cash and non-operating expenses and losses, deduct non-cash and non-operating incomes. And there we get the net profit before making adjustment of working capital. Here we need to adjust the working capital. We take into consideration the current assets and current liabilities. So here add decrease in current assets, increase in current liabilities, and deduct increase in current assets and decrease in current liabilities. So lastly, we'll have to deduct the income tax paid. Here we arrive the cash from operating activities under indirect method. So let us look at the second activity, that is cash from investment activities or investing activities. So when do we invest and in what all do we invest? So cash outflows and cash inflows take place because of investing activities also. So what are the cash inflows and cash outflows of investment activities? Let us look at. The inflows of cash take place when the company sells the fixed assets, when company receives dividend, when it receives interest. So in these circumstances, the company receives cash due to investment activities. Less outflow of cash due to this. What is that outflow is cost of purchase of fixed asset. Let us look at the third part, that is financing activities. There also the inflows of cash and outflows of cash are there. So what are those? Let us look at inflows of cash due to financing activities. The first one is when company issues shares, debentures, at that time it receives money. So that is financing activity inflow. So what are the outflows of this activity? This is when the company redeems the preference shares and debentures, when it makes the payment of dividend and interest, at that time cash moves out of the organization due to financing activities. The difference between this itself is net cash from financing activities. So let us look at the revision part of this. Here, what are the three important activities of an organization? What are the inflows of all these activities and outflows of this? In every activity, we need to find out the net cash from operating activities, the net cash from investing activities, and net cash from financing activities. At the end, we have to add the opening cash balance and we derive at the end part, that is closing cash balance. Here we conclude the preparation and presentation of cash flow statement. So this will be practiced in the next slides or next session. So here I conclude all the theoretical aspect of cash flow statement. So thank you very much.